Here's a simple framework for how you can choose a target date fund. Step number one, just determine your provider of choice. If you opened up your account with Schwab, you might just want to use Schwab's target date fund. But you could also look at other brokerage providers. Pretty much every brokerage has their own target date funds. So they'll just be named with the name of the brokerage. So it might say Vanguard 2035 target date fund, something like that. Step number two, ask yourself, when do you want to access the money? And you don't just have to use target date funds for retirement. That's typically what people use them for, but you could use it for something else as well. It's 2023 and maybe you want to purchase a house 12 years from now. You could use the 2035 target date fund to invest your money that you're saving for your down payment. Step number three, look at the expense ratio and other fees. This is essentially the cost of someone else doing the work for you. So let's walk through a simple example of what this could look like. I'm on Google and I just typed in Best Target Date Fund 2040. You'll see some websites that have a comparison of different funds. So for example, this US News Money, it's a website that's going to compare several funds to each other. You'll also see some websites where they're advertising their own fund. So right here, Fidelity Investments, their target date fund, the ticker symbol is VFORX, and they're advertising it right here. We scroll down a little further. This Forbes article is going to compare some target date funds. And then we see some of these advertisements again. Fidelity and Vanguard, they're advertising their own funds. Let's just click on this article and see what it brings up here. When we go to this article, you'll see there's a list of different funds that you can choose from. And remember that I told you to look at who is offering the fund as well as what the fees are. Luckily, it's pretty easy to see on this website. For example, right here we have the Fidelity Freedom 2040 fund. So it's a target date fund for 2040, and the expense ratio is 0.74. Here's a quick tip. The higher the expense ratio, the more it's going to cost you. If we scroll up a little bit, this one by T. Rowe Price actually has a lower expense ratio, 0.58. So it's going to be more affordable. Now, really quickly, I want to look at this here, which says total assets. This means the total amount that people have invested into this fund. Currently, there's $386 million in assets in this T. Rowe Price fund. If you compare that to the Fidelity Fund, there's $23.98 billion in the Fidelity Fund, which means that it's a much larger offering. More people have chosen to invest in this fund. There's a lot of different funds out there, and it can get kind of overwhelming and confusing. If you're not sure which one to invest in, try and choose one that you recognize, right? So Fidelity, Vanguard, Charles Schwab, some of these bigger companies that are going to have a well-established, reliable fund. And you can also look at the total assets. The bigger this number, the more that other people have chosen to invest in the fund as well. One other thing about choosing target date funds that's really important, you want to look at their historical performance, right? If something has a really low expense ratio, but over time it hasn't yielded very good returns, maybe you don't want to invest in that one. So try and strike the right balance. Something that has a low expense ratio, low fees, but also gets good returns. You've now chosen the target date fund that you want to invest in. Where are you actually going to go purchase it? Well, the answer is within your brokerage account. I shared an example of a Fidelity brokerage account earlier. Go back to that video and walk through the example of how to enter in a ticket symbol and perform an order to purchase the investment. This concludes the first section of automated investing, target date funds. Let's move on to your next option, which is robo-advisors.